The return of my Coin Lady channel brings me much joy. The lights went off on XRP not long ago at JP Morgan and Bank of America. Crypto is going to be phenomenal, and I'm here to tell you that widespread use is on the horizon. In particular, you should begin getting ready for the months of February, March, and April as soon as possible. In today's video, I'll explain why the next several months will witness unprecedented levels of global public adoption. Since Trump has already signed more than 200 executive orders since taking office, I want to begin by discussing his inauguration and the things he has accomplished thus far. The stock market, cryptocurrency market, real estate market, overall economy, and everything in between are all going to be profoundly affected by what is still to come. Furthermore, there is a good chance that you may fall completely behind if you do not modify your investment approach immediately. To start, I'd like to address the reality that he has, in fact, signed more than 200 executive orders. This surpasses Joe Biden's record for his whole term, and is almost equal to Trump's number from his previous administration. Is also 4 times what presidents before him averaged each year. The impending tariffs are one of the most significant shifts in his economic policies. We all know that Trump threatened 25% tariffs on Mexico and Canada as early as February 1st, and that these tariffs are currently the largest market headwind linked to President Trump. So, what gives? Either the United States will see less trade with Canada and Mexico, or the two countries will impose tariffs in response, making American goods cost more in their countries. Consequently, this will set off a chain reaction in the market, leading to what amounts to a trade war in which, well, everyone will be involved to some extent. What matters now is whether this is going to be bad for all sides, and whether the US will emerge victorious. Although we have a decent notion of what will happen, we don't know the exact details. Looking at past cases, it is clear that tariffs, especially when applied to Canada and Mexico, are likely to cause inflation. Inflation might increase by 80 basis points if the 25% tariffs on Canada and Mexico lead to a 50% pass-through on PC. A 75% pass-through would increase PC inflation by 110 basis points, according to DB. This is the most ridiculous inflation rate ever recorded. With the money printer returning to operation, and all of this happening in 2025, you had better be ready for the consequences for everyone. Beginning in June 2025, with a 67% probability of rate cuts, the markets now anticipate a base case of interest rate cuts. However, the overall base case predicts only 1 or 2 interest rate cuts in 2025, a significant decrease from the 5 cuts anticipated in 2025, when the Fed pivot started. The US dollar has risen steadily since the start of rate reduction. The combination of a stronger currency, fewer interest rate decreases, and a focus on the United States in policymaking has caused prices to rise. Amidst one of the most peculiar market dynamics ever witnessed, the US dollar has risen nearly 10% since the Fed pivot started in September of 2024. However, at the same time that the USD is rising, so are the prices of gold, Bitcoin, and stocks. Additionally, the US debt ceiling continues to rise at an alarming rate. Trump will address the US debt, that much is certain. We still don't know the specifics of his plan. Additionally, it appears that he intends to implement boochar tariffs. He is also likely preparing to implement quantitative easing at some point this year, as we can see. Money printers will, in essence, continue to operate. As a result of tariffs, people should brace themselves for potentially insane inflation rates. Investors will seek for asset classes that can help them maintain their wealth, as the value of the US dollar is expected to decline significantly this year. Therefore, I believe that assets such as XRP, Bitcoin, and others will likely perform very well during each phase of quantitative easing, or the money printer at work. Well, the crypto market saw Bitcoin's price skyrocket. Accordingly, I believe Bitcoin still has a ways to go. It will soon replace all others as the industry standard. Crypto is substantially larger than that as well. My guess is that it has to do with money. In my opinion, Bitcoin will serve as a store of value and the gold standard, while the other cryptocurrencies will serve as utility projects that offer practical benefits to the organizations that utilize them. This will lead to significant cost savings and financial gains for many organizations. I believe that US-based crypto projects like XRP and HBAR are excellent examples of ones that you should invest in at this moment. And Bitcoin, well, it's not a bad store of value. I'm also interested in Bitcoin mining, which is actually incredibly profitable. And if Brian Armstrong is correct and Bitcoin does reach several $1 million, then mining Bitcoin and simply owning Bitcoin will be incredibly lucrative. I'll also have additional information about that. The ways in which you can also profit greatly from mining Bitcoin. However, we should also discuss the current situation at Bank of America. The CEO of Bank America has stated that the financial sector is prepared to accept cryptocurrency payments if authorities approve them. What this means is that, yes, the majority of big banks are prepared to fully embrace Bitcoin. They will have self-custody services, which are similar to an exchange. Will increasingly use cryptocurrency as a medium of exchange. Among other things, they will soon provide crypto payment alternatives via their credit cards. And it's not just Bank of America. A plethora of other financial institutions are now publicly acknowledging this. According to the quote, the banking system will push the trend as an actionable aspect of it once the rules are in place and it becomes a genuine entity that people can actually do business with. There are a lot of financial transactions, and the United States of America is the world's leading economy, therefore this is obviously quite significant. The sums involved in these USD transactions are in the trillions. What utter nonsense! Cryptocurrencies designed for large-scale transactions will experience unprecedented price appreciation as their utility, use case, and volume reach new heights, even if just 10% of that is moved into crypto assets. That's why, as I said before, I have a strong bias towards cryptocurrencies that are developing goods to meet this demand. Banker's Coin refers to XRP. Both companies are currently forming relationships of this kind, and HBAR was also designed with enterprise and large commercial users in mind. If we're talking about JP Morgan and Chase, we can look at the steps they've taken so far in relation to XRP and other cryptocurrencies. In 2024, JP Morgan announced that they would accept XRP as payment for credit and mortgages, which was a big deal, because it showed that they saw XRP's potential utility in real-world financial transactions. In addition, there is something I'd want to bring to your attention once again. Senior executive at JP Morgan and Chase on numerous occasions, Jamie Dimon, has stated his belief that the vast majority of cryptocurrencies serve no useful purpose and are mostly utilized by criminals for the purpose of money laundering and tax evasion. This company has already begun to accept XRP as payment for credit cards and mortgages, and that's only the beginning, isn't it? They are also interested in proposing the option of self-custody. In addition, while XRP does not have any direct dealings with JP Morgan, it does have some indirect dealings with them through cross-border payments. Your time spent viewing my video is greatly appreciated. Thank you for watching my channel and for subscribing. I will see you later.